Okay, well, Suresh Tantia is Director Investment Strategist at Credit Suisse. He's joining us now to take some questions on the global setup. Suresh, good to have you with us here. Thanks very much. Just talk to us a little bit about what we are seeing out there in the U.S. What's your team making of it? Is it sustainable? The market prices out rate cards, prices them back in. That's been the one constant thing over the last year and a half or so. Markets continue to do their own thing. What's your sense?
Certainly, there's a lot of uncertainty because the data has been quite mixed. One day we get data which shows that economy is much more resilient, but then the other indicators suggest that we are going to see a slowdown in the economy. That's why investors have been flip-flopping when it comes to the rate outlook and also on the equity market. I think broadly, it looks like the economy has been much more resilient compared to earlier expectations. That's why the equity market is going up, because there are a lot of shorts in the market. Every time you hear some positive news flow, whether it's the debt ceiling deal or the economic data, those shorts are being covered. But having said that, I think the upside from here seems very limited, given the expensive valuation. So we are advising investors and clients to stay on the sideline, because markets are going to remain range-bound in the next few quarters.
Okay, so stay on the sidelines. Markets are going to remain range-bound. Suresh, good morning. I remember, I think Japan has been one of your favorite markets for a long time now. Of course, people are just noticing the moves right now, but you've been bullish on it for a while. Tell us, as a strategist for the rest of the year, which are the markets that top your charts, and where does India feature on that list now?
So we are focusing on markets which are beaten down, and that would be China. Because over the last 2 years, China has come down by 30-40%. The economy is reopening, although the recovery is not as strong as earlier expectations. But still, economy is going to recover as people go out and spend money. And the earnings are going to grow by double-digit this year. So we see maximum upside potential in the China equity market compared to the rest of the world. On Japan, yes, certainly there's a lot of optimism right now, but we see limited gain from here because we expect the Japanese yen to strengthen going forward. And whenever Japanese yen strengthens, it tends to be negative for the Japanese equity market.
So Indian markets are likely to be sideways. Suresh, morning, Rima here. What about the US markets? Are you worried about a deep recession pulling down the US indices? They could see a sharpish correction through the course of this year?
So we are not expecting a deep recession in US because, number one, the companies don't have a lot of refinancing risk, at least not for this year and next year. The next big maturity will come in 2025. So they are not under pressure to refinance their loans or bonds. And number two, household balance sheet is still quite healthy, despite the fact that rates have gone up. So at worst, actually, we could see a shallow recession. Because rates have gone up and lending standards are being tightened by the banks, but we are not expecting a deep recession in the US economy.
Sonia, you mentioned Japan, right? I remember, by the way, Warren Buffett has now become more bullish on Japan. In April, I think he made some comments. But I remember watching a video in the late 90s or the early 2000s. Buffett described Japan as a great stock market without great companies. Yeah. Basically because...
but isn't it a bit late in the day to become bullish on Japan? I mean, the market has rallied so much.
In April, because it's just been, 3 weeks of rallies, right? But for 30 years, the market didn't do anything. 30 years, right? So there is a bit of a lift which seems to be coming through. Suresh, here in India, any specific pockets that your team likes? What are you guys focused on in terms of investment themes?
So broadly, Indian equity to remain range-bound. Nothing to do with the economy because the economy is doing okay, earnings are coming through. It's just that the valuations are expensive. So we see better value in rest of the Asian markets. Within India, we still like private banks because I think the loan growth is quite strong. Margins are stable or expanding. So we do expect double-digit growth in terms of the earnings for banking sector, and that should support higher prices for banks.
So why are you leaving public sector banks behind? I mean, SBI had a fabulous 17-18% retail loan growth as well, right? So in the PSU basket, do you like SBI as well?
We don't. I don't have a specific view on the stock, but sure. Yes. So yes, public sector bank also look interesting. But when we look from a fundamental risk-reward perspective, I think there is better value in private banks compared to public sector banks, because end of the day, it's quite likely that global economy is going to slow down, and that will have impact on the risk appetite of the investors. So it's quite possible that foreign investors are going to sell down on the names or sectors which are more high beta, and that's why we prefer more high quality private banks over public sector banks.
Any other sectors or themes that you like in India, Suresh?
Consumption is still a good story for us because economy is doing well. We are seeing across the board all the economic indicators suggesting that economy is going to grow, earnings will be up double digit. So this story has been playing out for the last few quarters, and we do think auto and all the consumption sectors, they should do well.
Okay, Suresh, we'll let you go on that note. Thanks a lot for joining in. Have a great weekend, and thanks for speaking to CNBC-TV18. Well, that is the word coming in from Credit Suisse. They say the upside seems limited, but the market that they really like now is China. They like beaten down markets, and they believe there is a valuation upside there. Let's do one thing. Let's take a quick break. Plenty of stocks to talk about on the other side. Our entire team will be with us, so don't go anywhere.